Hello everyone and welcome to Day Trader S&P 500. Today is April 18th, 2021. This is Dale Woodson, editor of Woodson Wave Report, one of Timer Digest's top-ranked market newsletters. And we offer a couple of subscriptions here. We have an annual subscription and a monthly subscription. And wanted to let you guys know about that. Let me knock those down. And there's our new website. It's been up for about a week. They're ironing out a couple bugs, but we're happy about that. While Woodson Wave was established in 1997, we had the same the same website since then. So we recently got it changed and updated. We got a lot to cover today. Obviously, we're going to look at the usual, the S&P. We're going to look at Tesla. We're going to look at the Nasdaq and/or the QQQ. We'll look at Doge. We'll look at XRP. And HD. And first off, we have several people wanting to know about these Fibonacci time spirals. So let me begin with that. Okay, let me see what we have here. Fibonacci, that's Leonardo da Fibonacci, a 12th century Italian mathematician who this Fibonacci sequence is named after. That's me there a couple years ago. Everybody's going to Pisa to see the Leaning Tower of Pisa, and I was going to see Leonardo da Fibonacci, his statue. Okay, but anyway, the sequence is pretty simple. Let me get here, and he discovered a series of numbers when there's a lot of mathematical properties to it. But when you add 1 to the previous number, you get the next number. So 1 plus 1 is 2, plus 2 is 3, 3 and 2 is 5, 5 and 3 is 8, 8 and 5 is 13. You go on and on and on and on to infinity, okay? And that is the sequence, okay? And I've been applying it to dates since the late 1990s. Let me see if I have that chart there that worked out so well. This is a weekly spiral. I started at, I still have it up here, Orthodox top on August 24, 1999. Of course, the market bottomed Fibonacci 55 plus 1 days on October 19th on a daily chart. This started off as a daily spiral, but as it kept calling tops, I changed it to a weekly spiral. Okay, so you can see up here, it's kind of small print, but from the 824.99 high, 8 weeks later marked 1019, and that caught a low. Okay, and then it didn't do anything on 13 weeks, but the 21 weeks, that's the next number in the sequence, caught the 118 high. 34 weeks caught this 418 high, the week of, and we go on. 55 caught the 912. And then 89 caught the May 5th, and so on and so forth. We go 144 caught the May 18th. These aren't all the exact turning point highs, but they're pretty good indicators. Okay, it went in on for 7 years to 2006. And if we can show the more recent Fibonacci time spiral. Here we have one again. Let me back up a second. I want to show you guys that that spiral. There we go. Caught all those highs, but it started off, and I don't have the daily one. It started off counting alternating highs and lows. So just as, that's my point I wanted to make, just as this 824.99 was not the actual high, and this is in the Dow. It came in January, some 4 or 5 months later. So too is this 9/2/2020 high, and that's off. That shouldn't be 2000. It's 2020. My mistake. Thought I had corrected that. But anyway, this one started catching the alternating highs and lows. You can see 8 days is 9/11. There's a little slippage over here. 1 or 2 days, 3 days, whatever. Okay, and then 21 days is the next day in the sequence. Caught that high, and then the next one is 34. Caught that low. Caught that high. I got a little out of whack there. But 55 days always marks the low. It doesn't have to be a crash. Almost all crashes have occurred, 55 Fibonacci days from the top, but this is 55 days with a slippage of 3, and it caught the low, and it caught the 4th wave low, and since then it's been catching these highs. Next date in the sequence is April 23rd. Okay, we've got one more to show you here, and let me get to that, and that's not there. That is going to be here. Okay, and I've been doing this since the 90s, but the first time I applied it to a low to see what it would catch going up, and this one is dead on. All right, from that March 4 low, we had 13 days later marked March 17, bang, wave 1 high. 21 days later is March 25, bang, that marked the low. The next one is 34 days later. It made its target was 4.7, and the high happened on 4.6, and it points next to 428. Okay, and I got these here where 428, and this is where 5 equals 1 is 43.78 for price, and there is the time spiral, and we'll see, because the one spiral marks 423, the one from September, and this one marks 428. So ideally, this has been alternating high, low, high, low, high. So the next one is a low on 428. If it continues this alternation, where the one in September, and let me get that one here real quick, this one is doing highs. So could see a high on, if these both hold through, this one would call a high on 423, and this one would call a low on 428. We'll see how it plays out. Like I said, all these don't work. That one from 99 worked for 7 years. This one, so far, they're both working. We'll see how they play out. But that's the spiral explained. It's just taking the Fibonacci sequence and applying it to days, or if you will, weeks. Okay, I think I have that here. And there's the sequence there. It goes on and on and on to infinity. The key is, people say, where do you apply it? Well, that's pretty much up to the Elliottian, if you will. And that's where I felt or thought there was a high and got a low 55 days later. So that's why I applied it where I applied it. And that made me think that this was the orthodox top before the 2000 high, okay, because we had a low 55 days later. Same held true with the other spiral going from here. We had the 9/2/2020 high. It wasn't the all-time high, but we had a low of Fibonacci 55 days with a slippage of 3 days, and then it started calling all the highs. So this one here reminds me of the one in 1999. So far, so good. So enough with the Fibonacci analysis. Let's get on with the S&P. I want to go a top-down approach. I wanted to show you guys, this is a weekly log chart, and this is that high in January of 2018 and the low into March. And I wanted to, there's a little backstory here. I'll make it quick, but when I first started doing Elliott waves, it was easy for me to identify 4th waves and then work from there, either trade 5th waves or work backwards in the wave count. And to me, and we were looking for this early on, this expanding triangle, because this high here in January of 18 was a perfect Fibonacci extension from 2009 low. So I thought that would be the top, and it was. And for those of you who are looking for a bear market, we just had one. Okay, let me show you what it was. It was an A, B, C, D, E expanding triangle. That's a 4th wave. I don't know how else to label that. It's an expanding triangle with, let me get the trend lines on here. There's the high, and that didn't work. Let me get this trend line. Here we go. Okay. There's the bottom of it and our top of it. I'm sorry, and let's do the trend line here. Here's the bottom of it here. Okay, we had a little throw over or under right there. That's a 4. Okay, so we're looking for a 5. And then this made me work backwards, and I've been doing Elliott waves since the 90s. I always considered the 2000 to 2002 and the 2007 to 2009 declines to be two separate declines. But since this is a triangle and the rules of alternation with Elliott wave is 2s and 4s are correctives, triangles occur in fourth waves, 2 would have to be a flat, and here's the flat right here. I discovered that I changed my thinking on that after years of calling these two different declines. We have pretty much a double top, and so that's a flat, so that would be a 2. Okay, so then I work my way backwards, and we go to 87 high, which made a high and made a low. That's the crash of 87. I remember it well. That's what got me interested in Elliott wave and Fibonacci's to begin with. I remember that happened. I was much younger then. I had some stocks, didn't day trade or anything like that, just casually trading. And I noticed not only did the stocks I have go down, but every stock went down. And I'm like, well, wait a minute. If stocks move on news, how could all 500 of the S&P 500, they didn't have the same bad news? This news doesn't move the market. I was 100% convinced. And once I read Elliott wave principle back in the early 90s, I was convinced it's math and mass human psychology and hope, greed, and fear, and then sometimes panic. There's panic in 87. Okay, so what we have here is, let me get this in here. Okay, we're taking a top-down approach. This is a weekly log from the 87 low. If we get a 1 up here, a 2 down here, a 3 up there, a 4 down there, we get a 5 up there, and I like different degrees to be. Let's make that primary because that is minor. So here we got a 1, 2, 3, 4, 5. And I know we should do this since it's log instead of mathematical. Anyway, you'll be surprised to see this here. Let me just throw it in. Okay. So from the low, and this is weekly, and it's not exactly accurate, and I grabbed the wrong one. My apologies, guys. Let's do the fib extension here. Bear with me. There's 1. There's the flat 2. And you can see the 3 ends up right on the January 2018 high. That's why I was looking for a triangle, because I knew that was the high, and I was figuring this was just the last decline of it too. But that's 2. And they talk about long-term investing. Okay, I know I'm getting long-winded here, but if you got in at the top, like most people do in 2000, and you held for 9 years, you lost money. And if you held, just look at this, if you held all the way to here in 13 years, is that a long-term investor? You're now even after 13 years. These declines are fierce, and if you can avoid a big decline and just go to something safe, similar to cash, you can save a lot of heartache. Okay, the same here with that fourth wave. See, it doesn't seem like a bear market because it went up and down, but it was a bear market of over 2 years, from January of 18 to March of 2020. So here we are. We're looking for a 5, okay, and that's where 3 went. And if we go here to 4, right down there, you can see pretty darn close to where 5 should come in. Okay, the only caveat, and it's a huge one, is if you look at time, this wave is from 87 to 2000. That's 13 years. This is 1 year. 2018 to 21, 3 years. It is a Fibonacci 3 years, but I regress. Okay, so we're looking at this when, so now we want to analyze from the fourth wave. Okay, so we're looking from the March 20 low. Here we are here, March 20 low. Now we're looking at a daily chart. You can see here, I'll put this in. We have a lot of new subscribers. This is review for some of you, but a lot of the new ones. We're right there. There's 1, there's 2, there's 3, there's 4, and we're looking for 5. Okay, we want to make that as minor degree. There we go. And we analyze. It's like, where is all this in relation to the other wave? There's 1, there's 2, And you can see 3 is equal to 1 here. Could it have extended to here as a 1.618? Yes. But then we would need a 4. And what is that? Doesn't look like a 4 from this third wave, okay? I'm sorry, that would be 3, so it would be 4. So it'd be 1, 2, 3. So if that was 3 up here, let me just move it for argument's sake, okay? And this was 4. And this is what makes me think it's not. We need a retracement. 4s are long and sideways by nature, okay? Let's say 3 extended to there, and this 4, that is the low of 4. It's not even anywhere near the 236, let alone the 382, 500, or 618 Fibonacci retracement. And usually 4s go to a fourth wave of a previous degree, okay, degree of trend. So that's what makes me think it's not one. Could it be? Yes, it could. We'll see. It could have been that they just tricked everybody with that 4. But for now, we're staying here, and we are looking at that flat there for a 4. Sharp, flat. Rule of alternation. 2 is a sharp, 4 is a flat. Just like in the other one, we had a flat for 2 and a triangle for 4. Okay, so that's our analysis going from that fourth wave at March 2020. So let's look at it from the October 30th low on 2020. Okay, here we are. Now we're at a 2-hour chart. There's that fourth wave low. There's 1 up. There's 2 down. Again, minuscule. 3 equals 1 here. Okay, so let's put our labels on there if we can. Okay, we've got a 1 up, and that's a huge, I mean not huge, but sharp move up. I haven't liked it since that time, and I'll explain it in a minute. But usually the third waves are the strongest and most powerful. This angle of descent is almost perfectly vertical. It's straight up. Gap, 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 gap. Gaps all over the place. 1, 2, 3, 4, 5. This one may or may not have gotten close. But then the third wave goes at a 45-degree angle. It's like sideways and tired. 3 gains equality with 1 here. That's why it doesn't look like it extended, although the 1.618 is right on that high. It could have. That's a possibility that this 3 could be here. If so, we need a long sideways 4, okay? Would have to happen right from the current levels, okay? And then we have this 4 down, and then we're going 1, 2, 3, 4, 5 up there. So we'll look from this wave 4 on the March 4 low, okay? That was the 2-hour. Now we're going to the 1 hour. Here's that March 4 low. We've got 1 up, 2 down. And then there's where 3 gains equality with 1 right there, or it's way up here, okay? So we could label this as 1, 2, and then 3 up. Again, there's no 4. I mean, this is just these corrections, and I've mentioned this before. They're so minuscule, they make you think the only direction in the market is up, and as soon as they get everybody in and everybody thinks the only direction is up, that's when they pull the rug out from under you and run it down, okay? Well, we have a 1, 2, and then a 1, 2, 3, 4. Maybe it looks like a 5 up there. And let me see if I wanted to get into, this is a 1-hour chart. Okay, what is this low right here? This is the March 25 low. Even though it's not a 4, it looks like a 2. Let's look at things from that March 25 low. Here we go. Is this March 25? Yes, it is. Okay, see we got a 1 up, a 2 down, a 3 up, a 4 down, and 5 gains equality with 1 right near where we are now. It looks like 41.93. That may be off by a few because I don't know if this is exactly on the low. Here's the long and sideways low, but again, 4 did nothing as far as retracement in Fibonacci terms. We can look at 3 up. There we go. Here's where 4 would be a minuscule 236, and it's not. It didn't even get there. And here we go up. So that has to be a 4 because it's long and sideways. They're really easy to identify, but the retracements are virtually non-existent. Okay, and then we're looking for 5 up. Okay, so we're looking for, in the S&P, did I want to go further? Did I want to go to 1 minute? We'll leave it. Well, let's go there. Okay, so we're looking at, was it this April 8th, or was it probably the 14th we want to look at? What are we doing from the 14th? Let's look at our 1 minute. We've gone from weekly to monthly to 4 hour, 2 hour, or 1 hour, and 5 minute, and now we're on a 1 minute. And this is the April 14. Let me just double check. Yeah, we want to look from that low there. We're looking for 5 completed waves up, okay? Let's put our Fibonacci extensions on this. On a 1 minute chart from the April 14 low, we get a 1 up with that gap. We get a 2 down here. There's where 3 equals 1. That's convenient. Long and sideways forward. Do you see it there? It's a contracting triangle with lower highs and higher lows, okay? And then there's 4, and then there is 5 beginning. So if we take, that's a huge 1. If we take that to the bottom of 4, which it looks like it ended there, there'd be an A, B, C, D, E. I can spell that out for you guys. We get a 5 at, that would be, is that it? No, that's not it. That's another one. Where is that? Way up here at like 42.12. Okay, so we'll see how that plays out. It's been a price and time paradigm, if you will, and it's like which is going to win out, price or time? And time is calling for 423, possibly 428, 423 high, which is this week. And we'll see how they run it up. Okay, let's look at that one more time. Let's get into those turn dates. Here you see we're looking at 423 for a wave 5 high. This is called a successive 3 successive highs after it caught this from 3 to 4 down. It's calling for 423. And on the other one, we are looking at, where did that one go? It's right here from that 3-4 low. It's a high, low, high, and the next date is 428. So if these are both going to continue to be correct, the other one would call for a high on 423, and this one would call for a low on 428. We'll see how it plays out with respect to price, but that's what we're looking at for time. Okay. Let's move on to Tesla. Tesla 900 high on January 25. A clear 5 waves down. 1 down, 2 up, 3 down, 4 up, 5 down. It's going to be a 5-3-5. 5 down, 3 up, 5 down. And that was completed all the way from 900 down to 539 on March 5th. That date should ring a bell from the S&P. Then we have A up right on the 50% retracement, B down, and here's C up just beyond the 618 retracement. And let's look at that that relationship between C to A. There's A, there's B low, and let me get it there, right there. And C is almost exactly equal to A there. I did mention in a previous video, if they wanted to really shake out the shorts, C would be a 1.618 at 880, just under the all-time high at 900, and then bang, take out the rug from underneath everybody. 5 down, 3 up would have to be followed by 5 more down. So we're looking for that C wave on a larger scale. If you look at the parentheses here, there's A down, it's 5 waves. There's B up, it's 3 waves. And let's go from that current high for the B wave to get our extension to see what our target is. I believe that has not changed from the last video. Let's put it up there for the new subscribers, and we'll see that C equals A at 420. Obviously, if this B wave goes higher up to that 880, it would be just under the A wave because it'd be 20 points difference from there. Okay, what I really want to look at is from this B wave high. What we want to see is a series of 5 waves down and 3 waves up to say that the trend has changed. 5 down, 3 up, and these are all fractals of each other. So we want to look a little closer from the April 14 high, the B wave high, if you will, in Tesla. April 14, do I have that here? April 14, and we could count 5 waves down here. Okay, let me put a Fibonacci retracement on that. Okay, there's 5 down, and A, B, C up just near the 50% retracement. Let me do that for you guys here real quick. Let's get an A, B, C. There's an A up. There's the bottom of B down. And there's the top of C up. Okay, so that could be a 1 and that could be a 2. Could it go higher? Yes, there's a 618 up there at 758. There's the 50% retracement at 751. But we want to see this breaking down in 5 waves, okay? And we look like we have a 1, 2, 1, 2, 3, 4, 5, 3, 4, and we need a lower low here. Let me open that up. I'm curious now to see what's going on. If that is starting the third wave down. 1, 2, 3, 4, 5, 3, 4. Boy, that's tight. That could be a lower low. What is that low? 736. And what is that low? 737. Technically, that's a lower low, and we could have a 1, 2, 3, 4. Let me put that in there for you guys. We could have a 1, 2, 3, 4, 5. The minimum requirement for the fifth wave is to be lower than the third wave, okay? And 4 didn't violate the price territory of 1. You can see there, I can put that line. Let me move that out of the way. There's the low. I got it right under the wave 1 low, and wave 4 is right at it, okay? So we got to watch this play out, although I'd like to see that 5 drop a lot lower, but we get a series of 5 down and 3 up. We have a change in trend, kids, and that's what we're looking for to verify that. Let me get there. To verify that this move is over, okay? It's very convenient right there near the 618 and where C equals A. Okay, so that's what we're looking at Tesla. It could go up to the 880 if C equals 1.618 of A, or it could be down. And it's looking like from this 5 and 1 minute chart that it's down. Okay, so a little bit higher possibilities for 2 or C of 2, and then off to the races. Okay, we've got our make or break set on that. I want to look at the Nasdaq. The Nasdaq appears to be putting in a flat. Nasdaq's all-time high is still back in February 16th, and we've got 3 down and we have 3 up. We could see a 335 correction, but this high is still below that high. Until that's broken out or broken to the upside, we're going to look at a flat correction on that, okay, or a 335. I wanted to compare it to the QQQ, okay. We've got the QQQ, and here you can see that February 16th high, but the Qs have gone on to new highs. Unless this is an expanded flat where you get A down, B goes higher than the beginning of A, and then C goes way lower than A. So we'll see how that plays out. That's an interesting divergence between the Qs and the Nasdaq. We'll see how that works out. Okay, we wanted to look at Doge. We haven't looked at Doge in a while. How exciting is this? Okay, everything counts from the March lows, and we have a 1 up and a 2 down, and it looks like you can look at this right here, and you can call this as 3 of 3, because the third wave is the most powerful, and a third of third wave is even more powerful. And you can count a 1 up, a 2 down, a 3 up, a 4 down, and a 5 up. I want to look at that, and you can see this wave here gained a 2.618 multiple. 1 of 3 was a 2.618 multiple of 1. Okay, but let me see how this is breaking out here from this low. All right, let's see how it looks Fibonacci wise. Let's get our fib extension for this 3 wave that is extending, and there is 2, and it went past. That's because this doesn't go past the 4-time multiple. It does a 1, a 2. Let me see here. I don't think TradingView goes 4. Yeah, and then there's a 1.72. I guess we could throw that in there. And then that's no. We need something. Anyway, let's just say this third wave, again, third waves are most powerful, okay? So let's look at the fifth wave compared to the third wave, okay? And we'll go here to look at, there we go, there's the straight up third wave, and that fifth wave, again, a 4 times multiple. We got more than a 4 times multiple here and a 4 times multiple here. Okay, so let's break that out. Let's say that that is the high. Okay, I'm going to break that out a little more even. We can bring that down. That was off by a little bit. Okay, well, we should have brought it down here. It's going to change everything. Okay, so let's look at the retracement of 3. Let's remove that. This, wow, that's a lot to retrace. 1, 2, 3, 4, 5. Let's see if we can get to 1, 2, 3, 4, 5, 6, 7. That's another thing. If you want to count waves, just remember 5 waves up is in the main direction of trend. Okay, so it's, if you can count 5, then you can count 9. That's a multiple of 5. So you got 5, 9, 13, 17, 21. So if you can count 1, 2, 3, 4, 5, 6, 7, 8, 9. That's a multiple of 5. That's 5 waves up, okay? Let's see if we can get a retracement of this last move up. Okay, that looks like it ended there. And we're in log scale. That's going to mess it up. I got to do that. Take it out. Do this. Here we go. And you can see that it made a 50% retracement of this most recent 5-wave high, and it's almost to the 618. 618 is 25.08. Okay, so that's where we're at with Doge, up and up and up. We'll see how that. Let me put that back on log, and well, that doesn't look so pretty, does it? Because we zoomed in. But that's it for Doge. Look for that. That pullback could be over. Could go one more down to the 618 at 25.048, and then it's up, up, and up. And these are 4 times multiples, these waves here. Okay, somebody wanted XRP. Do I have XRP here? Yes. Okay, we're looking at the March lows again. We have 1, 2, 3, 4, 5. That's a 1. That's a 2. And 3 gains a perfect 2.618 multiple of 1. At that high, it looks like it is, let me see what that high is. It says over here 89.87. We could look for a 4th wave pullback followed by a 5 to new highs. 1, 2, 3, 4. Let's see what 3 gives us as far as retracement levels for 4. We'll put in the retracement tool there from the beginning of 3 to the end of 3. We're in log scale again. Okay, there we go. That's a little better. And you can see 4 down. The 50% was here, went past it. The 618, or is that 50 there? It's 382.50. The next Fibonacci level of retracement is 49.098. And the last one down here is just under 40, like 39.35. So we can look for a 4 down and then a 5 up. We're in a 4 down. The 3 happened on April 14th. Boy, that day rings a bell too, doesn't it, from the other analysis we were doing in the S&P. One more, HD. What does Home Depot have to offer? Again, everything comes from the March lows, okay? And if it counted like the S&P, it was on, I believe it was April 29th, and that's the 28th. Let's see what we have here for this first wave. See where wave, and this is 0 retracement. Let me count that out. 1, 2. We could, let's just count the very first 5 waves. Very first 5 waves. See what we get here. There's 2. And anyway, just with the naked eye, you can see that this is a 4. Long sideways by definition, okay? And there's the throw under to fake everybody out and take their money. Look at that Fibonacci extension right there. Isn't that something? So we can count this as a 1. Let me do it, okay? Let's get the 1, 2, 3, 4, 5 going here. Okay, we could call 1 down, 1 up, 2 down, 3 would be here, 4 would be down here, and 5 would be up here. Okay. It looks like a completed five-wave pattern, and this here is unbelievably strong. Could be a blow off top. We could see. We could look at this from that fourth wave, but I don't see, again, hardly any pullbacks at all. Let's just get a retracement just to see the last move up from, and what is that date there? That is March 5th. Imagine that. Everything's turning on the same dates. When one of them moves, they're all going to move. The S&P and all of them. Okay, there's a 236 at 308. The 382 target is 296. 50% is 286, and 618 is 277. Okay, so if this retraces that, that's what we're looking at. Let's just say it retraces the entire five waves from the March low. Okay, if that is a completed five-wave pattern, now we're looking at right there where all that action is. That's the 236 at 283. Okay, and then we have the 382 just under or at the fourth wave at 255. And again, if this pulls back, it usually goes in the area of the previous fourth wave of one lesser degree. So that's between the 236 and the 382, between 283 and 255. That's where I would expect any pullback to go, because there's a lot of support here. There's further bearish potential down here at 233 and then 211. Okay, so that's what we're looking at there. We want to remind you guys that we're looking at this for the S&P in the very near term. 423 comes before 428. So that's what we're looking at for happening this week. Look for a new all-time high. Until next time, take care, everyone.